Welcome to TradeTheMBI.com. This is John. This report is for the 8th. Hopefully I don't sound a little sinus. Let me go through the numbers here on our, starting with the NASDAQ. Full bloom here in Florence. Wonderful spring. It's just gorgeous, but all those plants are blooming and a little bit of an allergy attack, so hopefully I don't sound too nasally. As we scroll through, it was quite an interesting choppy Wednesday. Market bounced around a lot, finally pushed to the upside. And this is what I was saying. I just really, a lot of people will see short signals, and some people said to me, "Oh, don't you understand? It's about to fall dramatically." No, there was nothing in there that was telling us that there's a dramatic fall underway. It really was just, you have to have a little bit more than just a simple construct of the reading for major cataclysms that everyone wants. And the fact that you have some weakness and some transition, that's not enough to say that you're going to have this meltdown, because we don't see anything in here with dips below the red line or anything that suggests that we have to retrace any of these lows or anything. And we haven't even seen an extreme, which means there's plenty of liquidity coming in here. And this is a good view in the extreme here, because in fact, even with this selling, you can see that we're actually at the bullish stage of move up there. Could present a decent opportunity. The oddity of it is that you've got this gap that just hasn't seemed to close, and this rising setup with the steel and cyan is not necessarily the greatest in the world. I mean, any buy you get here is going to be in a death zone. It just means the market, for now has potentially topped out. Doesn't mean you're not going to see, a new high broken to, but overall, you just want to be cautious with this one. That's pretty much just what we're seeing now. If this starts to break down further and we head towards the red line, then we can expect to see something a little bit more dramatic. But got a nice dip well below the lows. They bought that back up, which is, again, we're so close to that fifth of the month where all that liquidity comes in. Not a shock. The numbers are still indicating sell within this broader thing. Doesn't mean we aren't divergent yet. And actually, if we continue that setup and get a hold or even a rise in price, then we'll definitely want to be looking at some longer term puts to have just set aside. Now, the NASDAQ clearly followed within that ugly trend. Perfect. Here you get the cyan rising now, making a new, cyan making a new peak higher from this pivot down here. So that's definitely bearish. Obviously the steel below is bearish, and the green continuing lower, definitely bearish. So, but did you get into a situation where it's like, gotten to extreme result? No. In fact, the new day is starting just a little bit lower on the extreme. It's early though. Did flip to red trend though. It's an interesting one to note. So clearly the NASDAQ we knew was already weaker. The YM had actually looked weaker as well. We ended up with the little buy on the fading there. You got the teeny pop, but this rising has never really done well as far as price goes. But you can see that extreme holding it up. So, choppy. It's kind of what I'm looking for. Choppy. USO rising though. Potential positive to that aspect of it. Hasn't crossed over yet, so this becomes kind of critical. A pivot down here, and then we can really look for a clear signal that the market's going to break down. If it moves to the upside, then we can probably see more towards the break. And this is also another one of those clear ones. We saw that, if gold had turned into a buy, we would have been excited and said, yeah, market's got a good shot of, really, fading a bit more. But look at that. We saw this breakup. We knew that this was not going to happen from a false breakout standpoint, and it did exactly what was expected. Some other ones, X, we knew there was nothing going with that. Finally, it's still been in that deep red. No change there. That's a big separation, so it's going to take some time to work out. But again, that's where selling out of the money put on those situations works out just fine. 1 day left, you would get those at 25. CLF likewise was another one that could see deep red even with the positive moves on it. It did flip negative right about there, and you still had though the rising red. That's why I said just look for an out of the money put sale on that one. Definitely sell calls if it was one of those that you already owned. Likewise, that happened right here on the crossover right before it started to fade. Kind of makes it easy in those cases. I think the other one we look at too, WLT, very easy when it comes to those 78-minute signals to go ahead and take a broader call sale opportunity. AIG, we knew that we had safety zones, so that it was surprising that we had that big a dip from it. And of course, they brought it right back up, pretty close to where that was in the first. Still, it is cascade from the sell signal that came in. We just weren't expecting a huge decline. It did retrace a bit. If we do a 50% Fibonacci, it probably went past that, but interesting to see how much past it went. A little shy right there. So you went somewhere in between, well past the 61, scared enough people. Then they gap it up, forced the short covering on there. Nice play on that part. And there was the WLT. Gosh, see, you can see every time it got close to moving anywhere, never got a crossover from that separation, and continued to spell decline well below the red line still. Now deep red. Could pop a little bit from there, from the oversold. It's interesting here because the automation setup bought this configuration, which didn't look too particularly attractive with the separation, and then sure enough, the pivot immediately was to the wrong direction, and it started to cascade lower. The one I actually like was right here, where you break over at this particular spot. It should be one over right there. You've already crossed with the green, so you've already got your beginning move, but then the steel moving above the cyan, where cyan is dipped below the zero line. I would have, well, I did take that, so I shouldn't say I would have loaded. I did take that as an extreme opportunity to jump into what should have been a decent run, and in fact turned out to be, it's choppy, but still pretty decent run as far as that goes. Slightly overbought, coming right through there, forming a little bit of a potential spider. Would require taking some of the gains on that, but the breakout into the new zone, now the question is whether or not you get a pivot lower of the red, in which case then it's time to take more gains on setup like that. Let's look at some of the alert stocks because these have been very effective. Apple, we really weren't too concerned. I mean, yeah, some people say, oh, well, it's dropped almost 10. Yeah, but you've dropped $10 on, a spike, and you're still holding the major move. So I don't consider that to be a real horrible event in any way, shape, or form. Amazon, we did not like Amazon from a long setup there, and sure enough caved, even getting a little closer to that steel, breaking down further. And now that it has dipped below the negative 13, though, be starting to look for pivots to the upside as long as it doesn't dip below the red line here. But retraced exactly to this test of the low rate there. Didn't have to. There was nothing about the extreme that required it to do it. It was just poor reading, bad setup for it. Never got the crossover, and once it started to roll across, that was easy read. Google has been another one of those that's been ugly for quite a while from our read, and still the same, and that was a perfect time to get those deep red popping in right there, just to warn that not a good opportunity. Netflix, another one that was in our sell category. It started to come up, couldn't get the cross. Now it's got a de facto cross with the dropping, but you've got steel dipping below here. We had the lower peaks. This one could turn around actually pretty decently. If the green starts to pivot up here, we would end up with higher pivots, but probably another day or so away. So you'd have to start looking at that one more intraday because that could be an interesting play. PCLN was a dog that just kept scratching until it cut itself, and there it goes. Comes right to those peak points. The deep red let you know that, hey, this was an easy opportunity to short the pops and just follow those drops. And sure enough, we were talking about it retesting the low right here. Now, from my standpoint, testing that middle range of the body as opposed to the wick is fine as far as a retested, but still no change in that pivot there. That's still within a sell signal. So easy call from that one. Tesla, that was also ugly from before. Again, you get to that point, you don't break above it, it starts fading. Break down with the steel below, and that's just usually a follow-through point. We already had the lower peaks from, we talked about it right here, and we had the surprise up day after the lower peak, which I always tell people, you can't worry about those kinds of things. They're going to happen. They try and do a last surge. It lets shorts add into their position without really being noticed, and then boom. So In fact, Tesla, what is that I'm seeing in pre-market there? What is that to 186 down 21? So I don't know. Maybe they. I don't follow the news on them, but I follow what the readings are. So that would be crazy if that is accurate. I wonder if that's just a post tick, but be in line with what the readings were. Twitter, this was the funny thing. StockTwits sent me this thing telling me that the bottom in Twitter had been reached. Really? I don't think so. Okay, that's still not looking very attractive. Baidu was a crazy one. It started off with a decent move, was getting close, and then it turned around the opposite direction with the pivots the other direction. And sure enough, when that happens, it's just letting you know that no, shorts have kicked up the game, and boom, they're in their attack mode, and it worked beautifully. FAS had a little buy signal from there. It's interesting because the cyan in this particular case did not peak back up and trailed, and you can see the effect. Nice buy move up there. Kind of interesting. It's counter to the market in a general sense. Facebook, yeah, nothing. These are all the same, doing the exact same thing, and people are expecting a different result. Reading's pretty clear on this, so it's nice to go over those and take a look and see that even within some of these bull moves within it, we could see the weakness wasn't able to overcome itself. In this case, it was the red that never got above the white. You had a nice little pop there, but continuing fade of the red. If the steel dips below, that could drip even further lower. So bear that one in mind. Let's go look at the intraday real quick of the 5K to see how that turnaround for Choppy Wednesday went. Alright, so here's the 50K from the other day. It was interesting. We came across, so I clicked one too many times, and we ended up with the nice little yellow magenta candles, which are the DOC crossover setups. And then you can see here, this was an interesting one because it came in, dipped. Steel was all the way down in the safety zone area. So price had a nice little pivot back to the upside, and then it produced the exact same reading, roughly around the same spot. And steel again started to cascade lower. So it was a quick return back up. But once the steel got back up here, zero, you had the huge spread, and then price started to fade a little bit. You ended up with the deep red, which I know always freaks people out because they see these deep red numbers come up here when market's moving up, and they're like, what? How can that be? And sure enough, you get the rollover setup that goes with it, and then that led to a deeper cascade that created good separation. The interesting part about it is that deep red was broken right here, the 1857 area, and then price proceeded to move about in kind of sideways fashion for the most part, and then it just gets into the junk period. But you had the nice breakout of the red-white into the new zone, held it up pretty well, and then it started to just make little higher peaks as it was coming across. And then once this peak broke out, took off to the upside and forced a ton of short covering within that setup. It was a nice play. I'll speed across here towards the end of the day. Got choppy again. And that is why I call it Choppy Wednesday, because that's what tends to happen. And it was interesting, given what our daily reading was, that it really fought it quite nicely. But you had a nice little move up there. Then you had the rollover cross, so that always starts with the green dipping below the red, and then usually you look for the red going there, and if it corresponds to a point where the cyan is crossing it, it's usually a good opportunity to get yourself short that particular spot. Where was that? 69. And then once you ended up with the deep red, you had plenty of time to wait. Could have captured quite a few different points, covered anywhere along the way, especially when the red started moving back up. It's always interesting to me when we get the pivot lower and you don't end up with your green breaking down below. It's usually a good indication that things are going to start to improve, and then you get the little buy cross turnaround because the red never dips below. And it's always a good one to pay attention to when it takes place. You also ended up with higher red pivots. That was a good sign that you're going to have some nice momentum with it, and took a little bit, carried through. It was nice. Now, I'll give you one. I made a mistake. I didn't realize that I had an order set up in there. It went long after I closed everything out on the day, and always look for this down here, this little yellow thing. It meant that I had an open order and I didn't even notice it, and so it ended up putting me long um, relative to the high. They're not too concerned because of what the setup is, and it's only 10 contracts. But the reason you see this one is because I think that they put in another conditional order all the way up there. So always be careful of that because you can get yourself into a situation. You just want to make sure you always push the cancel all. And you say yes, and then it disappears. That lets you know you don't have any open orders. So yes, even after all these years, still make a mistake once in a while. Gotta expect that, but you want to avoid those as much as you can. Not a good thing. As always, though, actually made some good progress in the programming. Nothing to show you yet, but it's interesting. Those that have the C program and that have the green numerals, it's an indication. Um, tighten some of the conditions on that one that will give a good indication at the bottoms of new buy entries. So moving along slowly but surely. As always, though, continue to look for me on the private Twitter feed, Stock Twits. Trade well. We'll talk again tomorrow.